in today's economy, new tax laws always are coming.
Always.
What are 2 or 3 important things the average person would know and need to know before purchasing a house or renting a property?
Okay, a lot of people don't talk about this, so I'm gonna go a different route. I'm gonna talk about something that a lot of people don't understand. They go out and they say, oh, buy an investment property first before you buy your own home. I've seen that. Or look at when you get ready to go buy a house, get something 2 times your income. Before you go to buy a personal or business property, look at a few things. 1, look at your DTI, debt to income ratio. How much income is coming into your pockets or into your business versus how much is going out? Because most mortgage companies or anyone is going to look at, if you're going conventional, 43%, if you're going FHA, up to 50%. What that means is that my DTI, my debt to income ratio, could be no higher than those percentages. Because if they are, then now you're going to cause yourself to pay a higher amount as far as interest and possibly have an issue with you qualifying for that home. So you also want to look at the second thing. You want to look at your credit score. You want to look at your credit score and make sure your credit score is the highest possible and get rid of a lot of your debt. That's the last thing. As much as you can, keep your debt to a minimum, especially if you're in business. You cannot succeed if you're going to have a lot of debt. When the economy crashed, which it did, and I think we've all felt it back in 07, 08, and it's crashed over quite a few times, and it's done that, then that's when you tend to pay more in taxes. That's when you tend to pay more in everyday living. Back in the 1950s, the interest rate when the war was going on for tax rate was at 70-something%. A lot of people don't know that.
Wow.
Now, the highest percentage is 39.
Right.
So double that. That's what they were paying. So you can't control those things. But if you don't have any debt, at least you're having some type of control over it. So you want to look at those high interest rates. You want to look at when the interest rates was low. Back a few years ago, mortgage rates, they had gotten down to 2 or 3%. Now what the problem is, persons have all this equity in there, but they don't want to give up the 2 to 3%, but they want to take the equity out. And then they say, oh, well, I'm going to take a second mortgage out. Yes, you can do that. But if you use that to pay off debt or to use it to start your business, it's not deductible on your tax return. Only if you're using it to do improvements or to purchase another home can you take that deduction. So they changed that under the job tax credit under Donald Trump.
Wow. Donald Trump did a lot of stuff, man.
Yeah, he did.
And it seemed like a lot of stuff that he did was tailored towards business owners.
Absolutely.
And people, I guess, in that space or moving towards that space, So, yeah, wow. That's very, very interesting. I'll be reviewing this one again. If you enjoy this content, if you like it, please think to tap the like button below, subscribe, and share this video with people that you would think would be interested.